Just wait. Yeah, I'm sharing the document. Yes. See, under black one, second unit, that is set-offs and carry forwards of losses. So this chapter, we are going to cover objectives, introduction, aggregation of income, set of losses, that related problems, and carry forward and set of losses, and that related problem, that entire summer we are going to discuss. So introduction part, already I explained that we have different source of incomes. So each source is different. So each source is from each and every source, we are going to generate the revenue. Sometimes instead of receiving the revenues, we are going to get the losses also. For example, for example, for example, there is a business. In the business, so every time we are not going to get the profits. Sometimes we are going to get the losses also. So that particular losses, from where we are going to adjust, how we are going to adjust. So whether that same business or another business, that same head or another head. So that all the rules and regulations we are going to discuss here. So aggregation of income. Aggregation of income means what? It is the gross total of all incomes. So means what? Income from salary, income from house properties, income from business or professions, income from capital gains, income from other sources. The aggregate of all headings of all heads of income is called as a aggregation of income. So aggregation of income is the subject matter section 66. It states that taxable income computed under the different heads is aggregated. The resulting figure is known as a gross total. So that is aggregation of income. Next one, rebatable income. See, rebatable income means what? Rebatable income includes the total income, and first they rebate the average rate of allowed theorem. So that is different. And other one is the other incomes. Under this head, we will include these amounts which do not fall the scope of the assessee. Scope of the assessee of total income, but cannot exclude it. They are also called as a deemed incomes. So other incomes means other than that four heads, other than that four heads of income. That four heads, what are the four heads? Income from salaries, income from house properties, income from business or profession, income from capital gains. So any income does not fall under this total income, these heads of income, it will cover under the other income. And cash income, cash credit, the amount of unexplained cash credits found credited to the account of the assessees included the total income of that previous year. So it means what? Cash credits, when any amount is credited to the assessee account, which is not justified, which is not disclosed under which head it is going to be covered, so that all incomes we are going to take. Unexplained investments, the amount of investments not recorded in the books of accounts and for which proper explanation is not offered by the assessee, is added is total income and deemed to be part of the total income for the previous year. So unexplained money, unexplained investments, unexplained money, these all are not recorded items. So that not recorded items we are going to consider here. Next, investment, bullion, etc. fully explained. Yes. So amount borrowed or repaid on hundi. So these all are unexplained investments and other source of incomes. Now let us discuss about the set off. What is the meaning of set off? What is the meaning of set off losses? As explained above, taxable income from the various heads is aggregated and the gross total of income is found. While aggregating natural losses from the heads, if any, have to be set off against income from the other heads. So this process is known as a set off losses against the incomes. Through the whole process is easy. There are certain rules stipulated under section 32, 32A, 35 and 70 to 80, which have to be compliant with while computing the gross total income after set off losses discussed below. So simply, I will explain that set off means what? Set off means generally taxable income. Before calculation of tax, we are going to aggregate all heads of income. If generally, if you found any loss from any head, that loss we can set off from the remaining heads. So this process is known as a set off losses against the incomes. So that is first situation. First situation is loss of one source against income from the another source head under the same head of income. What it means? What is the meaning? Loss of one source against income from the another source under the same head. That is income under section 17. See, source is the smaller in scope of the head. One head of income can have any number of sources. For example, under the head of business or profession, assessee might have the many businesses. So similarly, while computing income under the head of house property, assessee may have the more than one house. Each of them is separate source under the same head. In all such cases, first of all, the assessee is required to compute the taxable income under the various source of income, and then sources are grouped head-wise. The losses from one source of income be set off against the profit from the another source of income under the same head. For example, a loss from house property A can set off against the income from another house B. This rule is subject to following the exceptions. Loss from speculation can be set off only against the speculation where the profit from speculation can be utilized for the setting of losses from the other business. Losses from the business owing the maintaining of horse riding cannot be set off the against the any other head of the same head. So it means what? Simply here we are talking about the set-offs and losses means what? Generally, we know heads of income. That heads of income is income from salary, income from house property, and income from business or profession, capital gains, and other source. So set-offs and losses talks about the when there is a one head, but under the same head, we have the different source of income. For example, generally, if assessee having more than 2 houses, for example, he has 3 houses, house A, house B, house C. So individual house wise, first we need to calculate the income from the house property. For example, house A, house B got the profit and house C suffered with the loss. So under the same head, income from house property, we have 3 sources, source house A1, source house B2, source house C3. So whatever A and B income is there, this C loss can be set off under the A and B. So that is called as a within the head, various different sources we are going to set off. Not only this, even that set off and losses for capital gains also we are going to do it. So capital gains, generally we have 2 types of income we are going to receive. Short-term capital gains, long-term capital gains. Short-term capital gains, we can see short-term capital gains, long-term capital gains based on time period we are going to decide. But at the same time, is there any short-term capital losses? And is there any long-term capital losses? We can set off the under the capital gains only. But conditions applied. What is the conditions? Any loss arise under the short-term capital gains. You can set off from the both from the long-term capital gains, from the short-term capital gains. But when there is a long-term capital gain loss is there, we cannot set off from the short-term capital gains. Long-term capital losses, we can set off only from the long-term capital gains only. Similarly, take business. So any business, generally business also, we classified into 2 types of business. That is specified business and general business. Specified business means what and general business means what? So any loss from the general business, you can set off under the source of specified business or general business profits. But is there any business loss is there? If the business is related to the specified, that loss we cannot set off under the general business. We can set off from the same specified business only. So here income from other sources also. There is 2 types of incomes. Generally, we have that speculation and maintaining of horse races. Remaining all the losses we can set off from the each source under the other sources head. But these 2 heads we can set off only that related speculation business only. Any loss, speculation loss, we can set off from the speculation profits only. And loss from business owing the maintaining of horse races, it cannot be set off the any other head income. We can set off only horse riding business only. So this is the story about the set-offs and set-offs of losses. So here some problems also they given. Go through that. I will explain it also. Following particulars are supplied by Mr. Ranga Rao for computation of total income. So this problem is relating to the Ranga Rao for computation of total income. That is details they given. Ranga Rao income details they given. Salary income computed 35,000. Already computed means already the total salary income is 35,000. Income from house property A 10,500. Loss from house property D 13,000. Loss from registered firm 20,000. Profit from speculation business 56,000. Long-term capital gains 35,000. Long-term capital loss 10,000. Interest on securities 12,400. So these from different heads related source of incomes and losses. Generally, salary income computed. Here there is 35,000 direct we are going to take. And income from house property A, 10,500 is there. And from house property D, A have two houses. House name one is A, house name is D. So one house is having profit 10,500, another housing having 13,000 is the loss. So from house property head, this is the income from house property. Instead of income from house property, loss is more because income from house property 10,500 is there, loss is 13,000. So additionally income from house property 2,500 is there. Okay. And next one. So this house property is over. Loss from registered firm 20,000 and profit from speculation business. See, speculation business is there. And what is that? Loss from registered firm. So registered firm also there. See, here, this loss from registered firm, generally these 20,000 we are not going to consider because this loss from registered firm does not fall under the any head of the following heads: income from salary, income from house property, income from business or profession, or capital gains. Okay, so this separately income from business assessment of firms is the separate we are going to calculate. And next one is the profit and gains business or profession. Totally we have that totally profit from speculation business 56,000 is there. And here profit from speculation 56,000 and capital gains 10,000 is there. So this 10,000 covers that specified business we are going to take. Sorry, this profit and gains business or profession, that is profit from speculation. This third head is not there anything actually. This one is the fourth head, that is the profit from speculation business 56,000 and capital gains 35,000, long-term capital gains 25,000 because we have profit 35,000, loss 10,000. After set off of long-term capital gains and losses, 25,000 is the our income from the capital gains. This 56,000 is the profit and gain business only. That is specified specific business. Here they given profit from speculation business and interest on securities. This 12,400 will cover under the income from the other source. So other source income, we are going to consider that income from securities. So after that, the total gross total is 1,25,900. This income from house property loss also, we can set off the remaining 5 heads. So that is the story. And next problem. Next problem. Mr. Satyam submit the following particulars for the assessment year. Compute his gross total income. Salary from Good Luck Limited 45,000 and profit from agency business. This is the business income 34,000. Loss from cloth business 10,000. These two are the one head only. One source, different sources from the business or profession. Business from the heading of business. So next, loss from short-term capital assets 10,000. Loss from speculation in silver 56,000. Winning lottery 50,000. This is the income from other source. Casual income 5,000. This is the income from other source. Interest on securities gross 10,000. Okay, we have to deduct 10% of TDS. They given gross, then 10% we have to deduct. Then we have to calculate the income from total house property. See, salary as taken 45,000. Profit from agencies, profit and business. Total income from business is 24,000 and income from other sources. Casual income is 5,000. Winning from lottery is the 50,000 and interest on security 65,000. Total 1,34,000. Loss from speculation business here not set off because the condition is any loss from speculation business we can set off from the only profit from speculation business only. Similarly, loss from capital asset can be set off against the profits of from capital assets only. Since there are no profits, these losses should be carried forward for the next set of years. So next topic, I will explain that carry forwards and set-offs of losses. See, generally, carry forward and set-off losses means what? Any loss arise within the period. If we are not able to set off same period, so remaining loss, we are going to carry forward the next period. For example, previous problem, loss from speculation business, we are not set off here because there is no speculation profit is there. So that these speculation losses we can carry forward to the next subsequent years. So that is carry forward. So here, in case of losses carry forward to the following years, carry forward to set up the next years, there are many rules for the carry forward and set up the losses. We will discuss and following the paragraphs. Okay, right. Generally, you should remember that losses under the following head only could be carry forward and set off. First one is the house property. What is the meaning of house property? See, house property section 71 talks about the carry forwards with effect from assessment year 1999, 2000. Loss under this head, which cannot be all set off against the income under the any other head income. So, with the effect from the assessment year 1999, 2000, loss under this head of, which cannot be all set off against the income under the any other heading income. Other head can be carried forward for 8 succeeding previous years to be set off from the income under the house properties. So simply, any house property losses is there. We cannot set off when we are not able to set off the entire loss. That loss we can carry forward to the subsequent 8 previous years. From there, we can set off. Under the section Business loss. Business loss which cannot be set off the same assessment year because insufficient profit under the other heads carry forward following the assessment years. They are shall be set off against the profit and gains of any business or profession which resulted in the loss originally must be continued to be following relevant previous years. See here, almost same whatever the rule is applicable from the income from business or profession. Income from house property, same. Is there any loss if you found from income from business or profession? So that loss you can carry forward to the next 8 years. And speculation losses. These speculation losses we can set up from the speculation profits only. But when there is a no speculation profits, that loss we can carry forward to the next 4 years. And losses under the capital gains. So losses under the capital gains, generally already I explained that any capital loss, short-term capital loss is there. That capital loss we can set up from the long-term capital loss. But is there any long-term capital loss? Any capital gain, long-term capital loss, we cannot set off any other head also. That loss we can carry forward next 8 assessment years immediately succeeding the succeeding period. And loss on race of horse riding. So loss on race of horse riding. So any previous problem we have 2 losses, speculation business loss and loss on race of horses, section 74A, subsection 3. So any loss, this not maintain the racers, but loss some money in horse races, such loss cannot be carried forward to the following year. It is only loss can be incurred the assessee who maintain the race horses that can be carried forward, set off the following year, so on. So within the head only we are going to set off this. So loss on race horses, we cannot carry forward to the next year. So if there any profit loss on horse races, if any maintaining a their loss on races of horse, same year. So that year only we are going to set off. Otherwise, we are not going to set off. So this is the losses and carry forwards. Next one is the unabsorbed depreciation. Depreciation is the necessary element of cost and therefore it is allowed. However, it is allowed only when there are profit and to the extent it can be absorbed by the existing profit. In case there are insufficient profits or no profit at all, there is a bound to be some depreciation which remain unobserved. Unobserved depreciation is carried forward to the following years. See, so this is the unobserved depreciation. Generally, for each and every head, there is a separate rules. So you have to refer that income from business or profession for the third heading. So you'll get that maximum information. Next one. So this is the story of the carry forwards and set offs and set of losses and carry forwards. So again, I'm going to start the revision. Whatever we discussed. Set off means what? Set off means when we have the loss from the any head. Within the same head, is there any different source? From there, we are going to set off. And even though there is a loss, the remaining loss, the relevant suitable heads we are going to set off, and it still there is a loss, we are going to carry forward. And carry forward means what? Generally, when there is a loss, when you found when we are not able to set off within the assessment year, so that loss also we can set off and we can move forward to the next year. So that is called as a carry forward. Generally, income from salary. Now I will explain that income headwise. In income from salary, we are not going to found any loss because this is service based only. So if you work, you will get the money. If you will not work, you will not get the money. So there is a no chance to raising of losses. Point number one. Point number two, income from house property. See, house property, there is a chance to raise the loss also. So sometimes under the same head, different source of incomes we are going to found from the income from house property. When the assessee having more than one house, that from more than one houses, for example, you can assume there are 3 houses are there. Hyderabad house is there, Vijayawada house is there, and Warangal house is there. So from these 3 houses, Vijayawada house and Warangal house got to the profit, and Hyderabad house is loss. So these loss we can set up from the remaining 2 sources. That is internal adjustment. Finally, one income from house property we are going to calculate. Still there is any loss of income from house property. For example, 3 houses are there is loss. So we are not able to recover from the other heads also. That loss we can carry forward to the next subsequent 8 preceding previous year, next subsequent previous years. So that is in case of income from house property. Income from business or profession. So income or business or profession, generally, when there is business also we classified into 2 types of business, general business and specified business. Specified business loss you can set up from the specified business only. But any general business loss you can set up from the specified business also. But when there is a loss of business, income from business, that you can carry forward to the next 8 years. And any capital gains. Capital gains, generally, there are 2 heads of 2 sources are there, long-term source and short-term source. Any short-term source loss is there, you can recover from the capital gain long-term. If there any long-term loss, you cannot set off from the short-term. When there is a capital loss is there from the both short-term and long-term, you can carry forward to the next subsequent previous 8 years. You cannot set off from the remaining heads. And also income from other source. So these income, specified incomes are different, and general income is different, casual income is different. Any specified loss is there from the income from other source, you can set off from the that specified only. For example, horse riding and winning of speculation. So this loss you can set off from the same head. If you are not able to set off, you can carry for the next 4 subsequent previous years. This is the story about the that is set offs and carry forwards. Next class, I'll talk about the deductions from the gross total income. So next class I will explain. So this today I explained that second unit. Thank you.